Last week, billionaire investor and trader Paul Tudor Jones did a NBC interview before the Fed meeting, and he said that he is going to go all in on the inflation trade if the Fed keeps ignoring higher prices. Well, with stagflate tax lie, what's probably going to happen is the Fed's going to keep saying inflation's only going to be transitory, prices are going to go back down, and then with the consumer price index, what can happen without telling you is the formula will automatically adjust without announcing it publicly, all the different changes to substitution of goods, hedonics, geometric weighting, chained and unchained CPI. There was Kyle Bass in the last week or two explaining this also on a recent interview, talking about how if the consumer price index was unchained instead of chained CPI, the real inflation rate, according to the consumer price index, would already be 12%, which is very similar to the shadow stats numbers. So you have a number of famous money managers coming out recently, like Stanley Druckenmiller, Dr. Michael Burry. Kyle Bass is talking about a number of different examples on his Twitter, either buying inflation hedges or talking about inflation and starting to allocate their portfolios towards that. So with Paul Tudor Jones, he said that he was going to have equal positioning in gold and Bitcoin, although with the smash in Bitcoin recently, I wonder if he's been buying more and what type of gold exposure he's been buying. Hopefully not GLD. Hopefully he's buying some of the good gold stocks or one of the Sprott Metals trusts. Maybe that's the mix, 50% gold, 50% silver, the Central Fund of Canada that Sprott bought a number of years ago, or the Sprott Physical Gold Trust. There's also the Sprott Platinum and Palladium Trust, and Sprott's also about to get into uranium with a physical uranium fund. So overall, you're starting to see more comments from more mainstream professional money managers like Stanley Druckenmiller and others start to move their portfolios, especially when valuations become more attractive, towards inflation hedges. Money managers like Dr. Michael Burry, he already started buying in the last couple months oil service stocks, oil pipeline stocks, so he's been loading up on those. And there's been other interesting comments from Dr. Michael Burry. Maybe I'll do another separate video on that in the next couple days. So to wrap things up here, Paul Tudor Jones said that he is going to have a minimum 5% exposure to gold, 5% in Bitcoin, 5% in cash, 5% in commodities. And he says he's not sure what he's going to do with the other 80%. Maybe he's just going to start spreading that out into that allocation strategy because the valuations on a lot of general stocks, large cap stocks, bonds, and real estate, the valuations on those things are sky high. Now they can continue to go higher, but there's no bargains to be had in many of those regular general asset classes. Some of the best bargains available are in commodity companies, especially gold stocks. And another billionaire, David Tepper, and maybe I'll do a separate video on this, said that he thinks that the best value out there right now is in oil stocks. I think the best value in terms of free cash flow and profit margins are in gold miners and gold stocks rather than oil companies, especially with all the restrictions that politicians and bankers are going to potentially put on these oil companies. Yes, that will force oil prices higher probably in the near future, but it could also severely hurt their profits and profit margins and the amount of taxes that these oil and energy companies have to pay. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or if you want more in-depth research, content analysis, and financial education, there is now 170 articles, charts, and audio podcasts behind the paywall for patrons, including 12 new articles out in the last 5 or so weeks, going in depth on global macro, companies, and sectors. And there's also a 45-minute long interview with Sandstorm Gold CEO Nolan Watson, and that is exclusive for patrons as well. I think it is one of the best deals out there. A lot of my competitors charge a lot more than what I charge per month. And if you don't like it, you can always cancel, although I think you're really going to love a lot of the content, research, analysis, and financial education behind the paywall. Plus, you're helping me pay my bills so I can keep making content like this because Google AdWords revenues running on these YouTube videos don't pay my bills. So if I don't have patrons, then I have to probably move more and more and more of the content behind the paywall in the not too distant future.